Hey, Simplifiers. I'm Evan, and today I'm sitting down with someone who brings a completely different lens to real estate investing. Meet Flint Jamison, a guy who spent 20 years designing aircraft, the 787 wing structure, and managing $120 million military programs, and decided to apply that same engineering precision to real estate. While most investors rely on gut feelings, Flint brings systematic risk analysis and data-driven decision-making to every deal. But he's learned that character evaluation matters just as much as spreadsheets. So today we're diving into how he evaluates operators across different asset classes, multifamily, medical, office buildings. We'll explore his recent dentist office portfolio venture and why he takes action with 80% of the information rather than waiting for perfection, and how building a kit airplane taught him lessons about tackling big challenges. We'll also get into overcoming investor objections, cap rate assumptions that make or break returns, and transferring leadership skills from aerospace teams to real estate partnerships. So whether you're analytical and looking to break into real estate or wanting to just improve your due diligence process, this conversation brings a very refreshing engineering precision perspective on building wealth. So let's dive in. Flint Jamison, how's it going, man?
It's going great. Thanks for having me.
Absolutely. What's really interesting about Flint's background is that he was an aerospace engineer. And then got into real estate. And you may be wondering, like, well, how does that work together? Well, you're going to find out. And I'm excited to hear more about, how his background as a leader has prepared him for what he's doing now. Engineers are usually trained to like optimize systems and mitigate risks and deliver, great results. And it's like, well, you really need that in real estate. So, Flint, man, I'd love for you to just share a little bit about, what it's like when you were in your past life as an aerospace engineer.
Yeah. Well, I'm an aerospace geek. I love airplanes. I always have. Still do. Yeah, roughly 20 years in that world. Designed the 787 wing structure.
So cool.
Modified aircraft for the Air Force. I was a program manager there, running a big team, doing major mods on a very large aircraft. So lots of cool stuff. And then I started building out a portfolio of real estate. Started out with a little duplex, and then I was like, you know what, this duplex is cute. It doesn't cash flow that much, and it was so much effort to do it. And
Right.
so I was like, and then I discovered, hey, you can partner with people and do multifamily, and things grow pretty quick from there, just because the scale, get 100
Right.
100 tenants in a single property with one property manager versus a whole bunch of duplexes or single family homes all spread out across the town. And then from there, I was just expanding into other asset classes, development. Now I'm in medical office buildings, and I'm partnering with all these experts around the country and bringing my investors a diverse portfolio. So I've really, really gone from that owning my own little duplex thing, managing
Right.
it myself, to partnerships, doing really cool stuff and totally diversifying.
So as you're, looking for experts, you're finding, who's excellent, not just at real estate, but this particular asset class. You said, multifamily. You've said medical office space. I think you said development. Like, what are the things that you're looking at? What are the aspects about the operators that you're going, hey, I need to mitigate some risk here. I need to know, how they're doing things. What's your due diligence like?
I've Through the years, I've been getting better at due diligence. A lot of it really comes down to a character profile and their
Mm.
experience.
Yep.
Um, have they done it before? And a lot of times, like, you can't have just. I've noticed people are like, "Hey, what are your hard metrics? Go, no go," and I'm like, It doesn't quite work like that. And let me give you this example. Just most recently, this medical
Yeah.
office building, we're buying a portfolio of dentist offices. And ultimately, we're going to sell this portfolio off to a REIT in 3 to 5 years. But
Cool.
meanwhile, we're going to sit on these properties in cash flow. All the tenants are dentists and they're triple net lease. They manage the maintenance. It's just
Boom.
awesome. It's
Yeah.
like this. The level of asset management is so low when you get into triple net leases because the tenant's just managing the property for you. Um, and they're cash flowing. It's a straight up business that's making profit and revenue, and they're paying you. So in this world, it takes a much different operator than say your multifamily folks.
Mm-hmm.
And the person I partnered with, this is like a sly pitch on our deal right now. It's kind of funny, but it'll explain the whole thing. The partner, he hasn't done a syndication. He hasn't operated a huge portfolio over years of medical office buildings.
Okay.
So when you look at that track record, you're like, ah. But the real story here is the guy set up a business 10 years ago or so with his dad, who's a dentist. They realized that dentists suck at running businesses, and a lot of dentists just want to do their practice. So they said, you know what, we're going to offer a service. The dentists will pay us, we'll run their business for them. And through that, it blew up. He ended up selling to private equity. He was doing
Wow.
100 million revenue a year. So he knew the dentist industry through and through. But when you're on that side of the fence, you not only understand the dentist practice, but you understand triple net leases. You're dealing with the landlords. So he knew it through and through. And then
Right.
he started building up his own little portfolio, friends and family portfolio. He bought like 15 of these properties of his own, being the landlord to the dentists. And so now that he's out of the private equity scene, he got bought out, they let him go, or he did his time in the private equity and then he's out. And now he's like, I'm just going to buy all these medical office buildings. So now you take this mindset, and here's a guy who's now got to buy properties with dentists as the tenant. 75% of your underwriting is that dentist a good business operator? Are they a healthy business? Do they have enough clients? Are they going to be able to pay the rent? And then he also really knows triple net leases. Like, that's when you say you make or lose money on the buy. In this scenario, that's true. If your triple net lease is not set correctly or doesn't have the right requirements in place as far as who owns what maintenance, make or lose money on that triple net lease. So he knows it. Actually, he wrote 2 books. They're back there on my shelf, and one of them is a triple net lease book. Anyway, so here's this guy, and I'm like, okay, so he doesn't have like 20 years of experience being a medical office building operator, but it doesn't matter because he's got all this experience knowing what it takes. And here's the best part. If a dentist gets hit by a bus, he knows how to take over that business. That's part of triple net lease. He gets to take over the business. He brings in a per diem dentist, keeps that business running, keeps the rent running. So I'm like, this is awesome. So in that scenario, going way back full circle to the original question.
Yep.
Evaluating the operator, and sometimes you're like, yeah, they don't have a huge amount of experience, but they have a huge amount of experience. So you just got to dig in and look at and see if they align with your. One, ethics and morals is huge.
Absolutely. What are some of those things for you that you're like, man, we gotta put the line in the sand on these things?
I hate saying this, but I've seen enough sleazebags that, like, you start talking to them and you're like, something smells off here.
Right.
I just recently did due diligence on something that smelled a little bit off, and I did a lot of digging on it, and sure enough, it was off. So some of that is just life experience and understanding how what's motivating these people.
Right.
In this case, this guy just super down to earth. Had lunch with him, and just a great family man. Just out there to provide back to the world. So
awesome.
yeah.
Yeah, so finding those values, because that's what really helps honestly resonate with between you and the operator, and then for investors, they want to be a part of something that's bigger than just a spreadsheet, right?
Yeah, absolutely.
So
And
when it,
here's another fun fact is he is a data weenie. He loves getting into numbers, and full cycle for me is like that's what I'm an engineer. I love the
right.
spreadsheets. I love the numbers. And for someone who cares that much about numbers, it's funny because he puts the numbers out there really in front of a lot of investors. And a lot of investors, you get doctors and lawyers and stuff, they're like, just I'm going to go on your experience over trying to
Sure.
dig into your spreadsheets. But that's kind of the value I bring to my investors is me and him geek out about the numbers.
Yeah, and when you're structuring those investments, I mean, what are the different things you're looking for in the underwriting to be conservative?
Yeah. I think everything uh, it comes down to there's a few factors here. Uh, and it's really cap rate is one of the biggest ones. What's your exit cap rate assumption? Because that a
Right.
small shift in that number can change your returns wildly.
Mm-hmm.
I used to originally. Here's a little lesson learned for people. I used to try to get in there and figure out is your tax assumptions correct? Is your insurance quotes correct? And at some point, it's like, am I doubling? Am I doing the work that they just did to verify that the numbers that they put in there is correct? And sometimes you're just like, to get insurance, they go out and get 3 quotes. I'm not going to go out and get my own 3 quotes to verify that their numbers are correct. And I'm not going to go talk to a tax attorney to figure out whether or not the tax assumptions are correct. So some of that is like you do need to lean on them, and they should be able to
Mm-hmm.
provide that information if you just want to do a sanity check on a couple numbers. But
Right.
cap rate's a massive one.
Mm-hmm.
Um, and then another thing I look for as I chase new deals is I I like to look for a variation in return profile.
Okay. Yep.
So like when when I was doing built to rent developments, I was raising for
Mm-hmm.
those last year and a half. There's no cash flow at all. So I'm like this year, end of last year, I was like, you know what? I got to bring some cash flow deals because
Right.
there's only so many people that want zero cash flow for 2 years. And there's
Right.
a risk profile, risk reward there. You get
Mm-hmm.
higher risk, should be higher return, shorter period of time. But not everyone wants to jump on that. So yeah.
Exactly. It's going to be a while before these actually cash flow, and someone's like, I I need cash flow right now, or I'm looking for
Or
something that's on a
yeah,
different
stability. Cash
spectrum.
flow gives you stability too.
Yeah, that's big. So as far as some lessons that you could pull from managing $120 million military aircraft program, like how do you bring that back into real estate? How do you bring that back into being you know asset agnostic, and yet going,
Yeah.
all right, there's some leadership aspects that I can be able to bring to the table.
Yeah. I think the thing that you think you're stereotypical engineer where you're just this data weenie and you're hunkered down in front of your computer screen. You don't talk to people. You're just an introvert. I'm playing in this world where I'm doing sales and marketing. As much as
Mm,
I hate to admit it, that's what I do. And it takes a great deal of interpersonal relationships, um, and sometimes it takes a bit of bullheadedness, especially
right.
when you're doing some due diligence. You gotta sometimes put your foot down. Um, and to be honest, if I wasn't a program manager managing a huge team of people, having to play the politics game in a big company, doing lots of presentations,
Hmm.
right? All of that transitions over alongside the data weenie stuff in me that I get in the spreadsheets and really see how they're checking the numbers.
Yeah, because at the end of the day, I mean, you're leading people, you're not leading spreadsheets. And so you use that as a tool, you use that as the way to be able to visualize. But at the end of the day, you're working with different kinds of people and different, needs that people have. And so how do you, find those things out, and how do you, overcome some of those objections?
Oh gosh. I think so. Objections are fun. When I first started out trying to raise capital, the syndication world is new to most people because everyone's normally stuck in their silos of I got Fidelity.com, my 401, and my IRA, and sometimes I do my own traditional stock investments. And then you say, hey, well, you can invest in an apartment building over here with us, and it gets great returns and all of these benefits. And they're like, smells like a pyramid scheme. I'm like, well, I'm not sure where the pyramid is, but this is how it works. It's all an educational process.
It is, yeah.
Ponzi scheme comes up, and I have to give it to people. I don't blame them, because the numbers on Ponzi schemes is going up, and it works against all of us who are doing things legally and just trying to all make money together. It's wild. So I've learned a lot about Ponzi schemes, and I can understand people's hesitation. That's another thing.
Sure.
Here's another engineering thing. We're naturally skeptical. So I can sympathize when people instantly hit that skepticism first and then educate. And so that's really how I approach it. And I kind of talk through, hey, here's how Ponzi schemes work.
How have you been able to overcome and, press through some limiting beliefs?
Yeah. I think it's natural to have them. I've come to accept that we all have them, and it's just a matter of how you get through it. So what's interesting in my life, I'll use examples because they're the most fun to listen to. Me and some friends back at Boeing decided to build a kit airplane. You can literally just go buy a kit and build it.
Yeah.
It's a huge amount of effort. And then it's your airplane, you can fly it. There's a longer story behind this. Actually, if you're on video, there's a model of it. It's a 2-seater aerobatic aircraft. And we're all talking. We're like, none of us, we're all engineers at Boeing. We all design aircraft in various aspects. But we're like, we've never built an airplane. Like, Boeing uses 100,000 people to build an aircraft. And here we are. We're like, we can do it. You just like, we can do it. So we did it. And it took us 4 years, and took us a boatload of people to do it with us. It was about, 30 people that were dedicated and we're all working together on it. It took us 4 years, a lot of hours after work. And in the end, we had an airplane that worked, and it was beautiful. So when looking back on that, the limiting belief is none of us have ever built an airplane. So what makes us think we can build an airplane? But no one, no one has built an airplane before they've built an airplane. So at some point, you just got to do it and get started. There's rules you follow. There's guidelines in place and instructions, and you can do it as long as you have the wherewithal and the grit to do it. And I always look back, like jumping into sales and marketing in the real estate space. I'm like, what am I doing? I'm an engineer. This is so stupid. And then I just started doing it. And you're like, you just got to commit and learn. You got to always be learning and educating. Because the education is nonstop in my life. And I become better for it, and I continue marching forward.
If you were to take, a book or two off the shelf, what would be behind you that, you're continually learning? Maybe it's a big idea that shaped you in the last year or so.
Oh my gosh. I like your books though. I've read those. Story Brand, 100 Million Offers.
Yeah.
One that I always like to go back to is Go Giver. I read that one a while ago, but that's more of like, it's a fictional story that has you entranced in this world of how do you give value to others ultimately gives value back to you. It is such a great storyline. Knowing that it's a fictionally written book with a really great storyline that has a very good purpose behind it. And it's just, I think it's wonderful.
So what would be like one leadership advice that you'd want to, leave with people?
I don't know that this is a leadership advice, but the one thing I tell people is you can likely take action sooner than you think you can take action. And just flashing back to when I was jumping from the duplex, well, heck, even just like choosing to buy a duplex, I probably waited a year longer than I needed to. I knew enough, but at some point you're not going to know everything. So stop trying to know everything and just take action. Whether that's making your first phone call to a real estate agent or whatever it may be. And then likewise, even jumping into syndications, I probably spent 2 years too long before I started taking real action on it. And so I could be in a much different place right now had I started taking action sooner.
And it makes such a big difference, like you're saying, you don't have to have, 100% of all the answers. It's like, sometimes you've got 80%, but you've got to just lean into the belief and the faith that you'll figure it out as you go, or that you're going to run into the right person. Have you had, a story or two about that?
When it comes to real estate, I think you have to expect the unexpected, because you're going to get curveballs and no book is ever going to teach you. It's just going to come at you. So everyone who's been in real estate has a story. I think when it came to syndications, and this goes for both people who want to be active and those who want to be passive, you're never going to know everything. And that's the whole purpose of the syndication, is because you're investing in a team of people, including me. When I go to partner, whether I co-sponsor and partner directly in with the team, or I have a fund of fund and we're investing in a deal, that team has more than just one single individual. There's normally, there could be 5, 10 people, 15, 20, depending on how big the organization is. And everyone has their own expertise within that, and they play a certain role. So not even everyone in there, right? This is like a company. Everyone has their own expertise. So why do you think that you need to know everything? And that's what held me back in syndications. As an engineer, I'm like, God, I got to know it all. I got to know everything, even though I'm partnering with people who are going to know other things that I don't know. That's really what held me back, until I was like, I just got to make that leap. And I found partners. I'm like, oh, sweet. So I'm weak on this. You're strong in that. When it comes to buying your own single family home or duplex, that you just got to bite the bullet. You got to, I mean, most people know how to buy real estate. That's not that hard. But when it comes to being a landlord, knowing how to manage a tenant, find a tenant, at some point, like, maybe you will self-manage, but why don't you start out hiring a professional property management team who has all the systems in place, who knows how to vet tenants, that can put a tenant in place and manage it there. Yeah, you're going to pay premium for them to manage it, but at some point you can remove them and put yourself in that position as you get smarter. Don't take everything on yourself.
That's so good. Well, Flint, where's the best place for people to connect with you?
Yeah, LinkedIn, just LinkedIn/Flint Jamison. I also have a website. It's vestuscapital.com.
Awesome. Well, man, this was a great conversation. I'm so glad to, get to know more about the mind of a aerospace engineer and how that applies to real estate. Really appreciate you coming on.
Yeah, thanks for having me.
When you combine engineering discipline with real estate opportunity, you don't just build a portfolio. You create a systematic approach to wealth creation that can weather any market condition. My key insight from Flint is you don't need to know everything before you start, but you do need to know how to evaluate the people and systems you're partnering with. If you want to connect with Flint, find him on LinkedIn, Flint Jamison, or check out VestusCapital.com. Also, go buy his book that he just recently released. Until next time, keep it simple, Saints.